So conscious of timing, we'll kick straight off. Welcome, ladies and gentlemen, and thank you for joining us for this webinar. This is the second installment of this series. Last week, we heard from Tom Albanese, the former CEO of Rio Tinto, and this week we're glad to be joined by Cynthia Carroll, the former CEO of Anglo American. So without further ado, I'll hand over to Andrea Hotter.
Thanks ever so much, Callum. Hello, everybody again. I'm Andrea Hotter, the special correspondent for Fast Markets in New York. I'm thrilled to be joined today by Cynthia Carroll, who is the former CEO of Anglo American, for the second in a series of webinars looking at the 2008-09 crisis and what lessons in managing those tough times might apply now. Cynthia was the Anglo American CEO from 2007 to 2013, and she's the only woman actually to have ever held a position of a major diversified mining company. She started her career as an exploration geologist at Amoco Production Company in Colorado, and then she joined Alcan. She held various roles there, including the president of Bauxite, Alumina, and Specialty Chemicals, and she was also the CEO of the Primary Metal Group. Cynthia is currently on the boards of Hitachi, American Securities, and Prince, which is another securities company, and she has previously chaired the boards of Anglo American Platinum, De Beers, and Vedanta Resources, and has also served on a number of other boards, including BP. So just a little disclaimer here that Cynthia is speaking personally and not on behalf of any former or current employers. And I think we should just kick off now. So Cynthia, welcome. Hi.
Hi, Andrea. Thanks very much for having me.
My pleasure. Thanks for joining us. So, you know, great to look back and with a retrospective view, but, you know, in hindsight, you're sitting there, 2007, you've literally just joined the company the year prior, or 2008, the year prior you joined. Any warning signs, you know, were there any signals that things were about to collapse around you?
Well, I think it's easy with hindsight to say that there were various factors that were aligned and we should have expected something to happen. But few recognized that it was coming, that the financial crisis was going to happen. Some investors suggested concern over the real estate bubble with the softening of the easing of the of credit, accessing loans. But we were at all-time commodity high. And was the market getting overheated? Certainly no one in the mining industry was suggesting this. China looked as though there was no stopping them in terms of their growth and their development. Infrastructure investment was booming. Demand for commodities across the board, iron ore, coal, met coal, copper, nickel, even platinum group metals. So, you know, we thought there was no demand was just going to keep charging ahead. There was no end in sight, starting with China.
And then obviously everything came crashing down around everyone. So it gets to September and Lehman Brothers files for bankruptcy protection. Talk me through that time a little bit. I mean, what did you need to do first at Anglo?
Well, just stepping back a little bit to put it into context, I joined Anglo January 1st, 2007. And since I was new to the company, I spent as much of my time in the first couple of months going around to as many representative operations as I could, underground, open cut, longwall. Around the world, I tried to meet with as many operators, as many employers, as many stakeholders, to get a sense of what the company was all about. And the board recruited me as a change agent. So I was brought in to address safety. We had been losing 45 people a year to fatalities. They also wanted to add more iron ore to our commodity base and fundamentally uplift our performance. We were a company that was doing things pretty much in silos. People were doing things on their own from place to place. You didn't necessarily know you were working in the same company, going from mine to mine. So how do you uplift the organization and think about capturing synergies across the group? So in the first half of the year, early on, our safety performance was still pretty lackluster. And in June 2007, I was out visiting a platinum mine underground And the CEO at the time approached me and said, we've had another fatality. And so I took the decision immediately to shut down the Lower Rustenburg mine complex in South Africa. We brought about 30,000 people up out of the ground. This has never been done before. The message to the Anglo American Platinum, to Anglo American South Africa, and to Anglo globally, and as well to the industry, was very clear that that safety was going to be first, and then we were going to work from there. And this really was the catalyst that brought the company together with a common focus and a common purpose. And I also took the decision to invite other vested parties who had a vested interest in the form of the governments and the unions to join up with us to protect everyone on our sites.
Right.
From there, we worked on a focus initiative to substantially reduce our costs, eliminate high-cost operations, and we launched what I call the asset optimization, along with the supply chain initiatives. We committed actually delivering $2 billion worth of value over 2.5 years, and that was really what started driving much more value across Anglo. And the results started flowing through. First half of 2008 was a record first half. We had operating profits of $6.2 billion, up 30% year on year. Record earnings of $3.5 billion, up by about 14%. We had an improved capital program of about $15 billion. And the outlook for the second half was really strong. And then September 2008 happened.
Yeah.
And it was a big wake-up call. But we were in a much better position because of what we had already been doing. I also put new CEOs in place in some places, a new CEO for Platinum, Anglo American Platinum, new CEO at Kumba. We were launching divestments of some of our businesses like Ska Metals in South Africa. And we actually achieved record results in 2008. But clearly we were faced with monumental challenges.
Yeah.
So we moved fast, we took action, we had to prioritize, and we had to make choices. Safety came first. In fact, our number of fatalities reduced by about 33%. In 2008, we launched 6 core values, including things like care and respect, accountability, integrity. We did a lot of strategy and scenario planning, thinking about optionality with respect to our portfolio base, which were the commodities that would create the most value over the medium to long term. And we focused on those assets that were or would become lowest cost, expandable, and had a long life. And with respect to capital, and this is where we had to make really, really tough choices. We had to either cut all of our capital and retain our dividend, or continue investing in select projects that would deliver substantial value in the short to medium term, and suspend our dividend. And after a lot of deliberation, we decided to suspend our dividend. We cut 50% of our CapEx, and we suspended our final dividend, focusing on cash preservation and safeguarding the balance sheet. And I can tell you, Andrea, this was a terrible thing to have to do. It was a tough choice and a decision to make. But, I had arrived 18 months earlier, working to drive change across this organization with about 160,000 employees on 6 continents, embarking on initiatives that have never been done before, working to gain alignment and value and focus. And I'm faced with the worst economic decline since the Great Depression. But we were not alone in cutting our dividend, and many of our competitors also did rights issues. I should say that we restored the dividend the following year as the balance sheet was strengthened, and the company was much more resilient, and the projects that we had been supporting delivered about $800 million of cash about 2 years later. And investors were very pleased about that performance. And actually, I mean, the bottom line was in 2011, we had record performance. You know, look back, I mean, in a case of, say, Australia, where we barely broke even in 2007, we delivered about $1.2 billion in value, and we delivered about $11 billion in profits in 2011. And even the asset optimization and the supply chain initiative, where we said we're going to deliver $2 billion, we delivered $3.2 billion. So I attribute this to the actions that we took during the financial crisis.
Yeah, and as you know, as you mentioned there, investors, mining's a long-term industry. You know, you can have a 15 to 20-year process from start to final return on a project, and who knows how many CEOs as well in between all of that process, as well as an investment community that's looking for quarterly returns. You know, how do you balance this, particularly that short-term push for returns by investors? Presumably tough decisions like you're talking about there with the dividend.
Yeah, as I said, really, really tough. Well, first of all, our employee base came first. The welfare of our employees came first. We would not cut anything related to safety. We were thinking always about repositioning Anglo through the cycle. And we reduced planned growth project, production growth. We downsized, as painful as it was, but it was all about the long-term sustainability of the business. Yeah. And as I said, we were embarking on divestments. Again, what was core, what was non-core, and what would really substantially add value going forward. And so we divested part of Tarmac, we divested the mineral sands business, we divested zinc, we divested part of all of our Anglo Gold Ashanti stake. And it was difficult in terms of credit market to access capital for new projects. So we had to be very prescriptive about, you know, what we wanted to support going forward and what we didn't.
So you're in the middle of all of this at this point. You know, what are you thinking about how long it's going to last? It's obviously you don't know, do you? So that must make it a lot harder.
Yeah, I mean, this is a really good question, and obviously very good question for today's world. We were preparing for all eventualities. We were thinking about multiple scenarios. I knew that we would be in a much better place because of the work that we had done over the first 2 years, but we couldn't stop. We had to keep driving for value. We created something we called One Anglo. So again, bringing everybody together. And with the financial crisis and the markets dropping, financial markets dropping about 90%, mining companies losing significant market share, we were all soft targets. Mm-hmm. And Mick Davis at Xstrata approached us as a merger of equals. Hardly, it was not a merger of equals. This was June of 2009. We had much more valuable assets and a commodity portfolio that stretched across the bulks, the base, and the precious metals. Just to remind everybody, we were the largest producer of platinum group metals and the largest producer of diamonds through De Beers. I was working on increasing our ownership of De Beers from 45% to 85%. And our results came out in July of 2009. We substantially outperformed Xstrata. So we pushed back very hard to say that this is not a merger of equals, and we certainly demonstrated that we were in a very strong position.
A bold move during a crisis. A bold move by him during a crisis, huh?
Yeah, exactly. Well, they were looking for opportunities. But we were also tracking China very closely. We were tracking stimulus packages very closely around the world.
Yeah. So, you know, we've talked here about the cuts, the productivity costs, the capital discipline. Like, what kind of things, that's the stuff that you can do. What are the things that you say we can't do this anymore? I mean, typically it tends to be things like exploration get put on the back burner. Was that the case? I mean, and is that something that you'd expect cyclically to be repeated this time around as well?
Yeah, well, I mean, there's a constant balance in your mind to ensure that you're operating safely, but you're protecting the business and growing the business for the long term. And what is the right growth? What is the right level of growth? And, you know, again, it was a really tough time. It's really tough times today. You have to be very dynamic in your decision making. And I kept looking for opportunities. In terms of priorities and, you know, what we would do and what we would not do, it was about maintaining that focus and that discipline. In terms of our meeting cadence, that certainly changed. We had to meet on a very, very regular basis. I needed our values to be captured, assimilated, and supported by all of our employees up and down the line. We prioritize people. We prioritize operational and cost efficiencies. We were focused on getting all of our assets in the first half of the cost curve, at least. There was a lot of communication with everybody up and down the line, and including our stakeholders externally. We were monitoring our performance very, very closely and sharing that performance across the group to make sure everybody was aligned and everybody understood where we were and where we were determined to go. And we were advocating for the reasons that we were doing what we were doing. And some of that was not so easy. What went on the sidelines, what went on the back burner? Exploration. We took a lot of exploration off the table, and we took a lot of growth projects that were much more long-term in terms of the returns off the table.
Yeah, and you know, as we see today, and as we have seen in past downturns, a lot of miners and processors decide to cut supply as a response. You know, I asked Tom this last week. I mean, how do you know how far to cut? Explain the thought process behind this and the kind of factors that you're thinking about when you're making those decisions.
Yeah, it's really hard, and it's particularly hard in the mining industry because when you cut, it takes much longer to bring it back.
Yeah.
And you've got to be very, very thoughtful and prescriptive about that. So we cut, or we stopped really high cost production, and particularly in platinum and in coal. Every production unit, whether it was an ounce, a ton, or a carat, we analyzed, and it had to be profitable or become profitable in the very short term. And it's easy for, you know, business units or operations to say, well, we're getting there. You don't have time to get there over months and months. You've got to get there very quickly. So we cut anything that was not profitable,
Right.
you know, very quickly, and just stop. But we created visibility of our cost positions across the group. So everybody knew where they were positioned on the cost curve. Everybody knew that they had support to get to a better position, and we gave them the tools and support to help them to get there. Additionally, with respect to safety and sustainability, as I said, we were not going to cut anything related to safety. But at the same time, and to your question is a very important one, care and maintenance of the operations is absolutely key. You cannot let it go.
Yeah.
Deterioration of infrastructure is paramount. You have to be thinking about that. And what is the impact on people? When do you mobilize and when do you demobilize? And these are very similar sorts of things that people are thinking about today.
Absolutely. I mean, are you looking across the sector? Are corporates talking? they probably can't talk to each other, but you must be looking at what your peers are doing and thinking, okay, you know, you're not acting in isolation here. Are there any particular voices that hold greater sway when you're making these kind of decisions?
Yeah, it's a really good question. I think you can be very, you can find yourself very isolated. I am observing today a lot of CEOs, a lot of business unit heads acting in silos, and that's not the thing to do. You've got to, in the case of the miners, you've got to think about the broader industry bodies like ICMM, the Chamber of Mines, the supplier associations. They play a really key role here. You should be having dialogue with a range of participants in the industry, as well as even those outside in your nearby jurisdictions, to try to learn what they're doing and in some cases solve problems together. I think it's really important to reinforce the rules of engagement, the terms of reference. And what I have found, and to your point, I mean, I actually did have conversations with industry participants at the time. You know, you can't cut corners in terms of housing or healthcare to your employees. You know, and you've got to think about the well-being of your workforce. So the industry really needs to watch this very carefully and prompt people to do the right things.
Yeah, and you know, and the healthcare issue now is obviously right at the front of people's minds, because 2008 was a financial crisis. This is a health one. I mean, that's a big major difference, but obviously there are some similarities, some differences. Anything really stand out for you when you're thinking about the past and looking now from the perspective of someone who's still sitting on boards of companies and dealing with this now?
Yeah. I think first of all, you know, this crisis is different from the last in that we started with very healthy economies. You know, things were looking very positive, very upbeat. The U.S. in particular was looking very solid with a respectable economic position. And now the U.S. is looking at 36 million people who are unemployed.
Right.
You know, companies every day are announcing downsizing. Rolls-Royce a day or so ago announced a reduction of 9,000 people. So it's happening everywhere, and people are worried about their jobs. They're worried about their homes. They're worried about their mortgages. They're worried even about finding food. COVID-19 is threatening, human lives, whereas in a financial crisis, that was not certainly the case at all. You can rebuild an economy, but you cannot replace human beings. And we did not drastically change the way we did business after 2008. We thought about preparing ourselves in a much more diligent way, but returning to work today will be very different. We need extreme and additional controls in terms of screening, in terms of testing, in terms of increased sanitation, in terms of social distancing. I mean, this is a fundamental change that is not going to go away. And the COVID crisis will clearly be alleviated once a vaccine is developed and distributed. But even economic stimuli will not have a huge impact until that happens. Mm-hmm. And the economic recovery period, I think, in this case, will take years and years. There's social change that's likely. Universal health care is likely. Working from home is much more likely. Yeah. Mental health is an issue. And I think countries will become very much focused on becoming more self-sufficient. This could lead to a lot more nationalization. Countries focusing on growth within their boundaries, within their borders. I think companies will have to consider supply chain much more carefully and thoughtfully than ever before. And I think there's a real question about how reliant will people be on China.
Mm-hmm. No, absolutely. And then, these are these are great lessons that we're learning now and changes we are expecting to see in terms of the lessons that we learned the last time around. You know, what were the biggest ones, and do you think they became permanent sort of memories for people, that they actually did change behaviors?
Well, it's easy to forget, right? And history does repeat itself. So we should all be reminded regularly of what happened in 2008, how we responded, and consider that as we go forward today. But the cycles are more frequent, no question about it. We have to be much more adaptable and responsive. I think we need to be more agile. We need to think about different operating models, different scenarios, different optionality all the time. And cost must be mostly variable so that it's adjusted in line with the market context. And as opposed to disruptive restructuring. Every time we have a setback, we have to rethink where we are and how we're going to do business. And we have to align the stakeholders accordingly. We have to work really closely with them to get them on board and to understand what the challenges are from us.
For sure. And just to wrap up, Cynthia, if you had to give a piece of advice, if your phone rings and it's the CEO of a major mining company right now, I mean, what are you going to tell them? They ask you, what should I do?
Well, I think, first of all, focus on people. And I see a lot of people, as I said a few minutes ago, who feel very isolated, but at the same time seize the opportunity that the crisis brings. Be flexible, be agile, be responsive, be courageous, and inspirational, and lead from the front, and take risk. I mean, now's the time to take risk. Do things that you never thought were possible, and start planning the future off the new normal. And as a CEO, you have to keep connected with your entire organization. You have to keep engaging. You have to be inclusive. And while maintaining the momentum, the drive, the focus, and the encouragement, and the pace.
Lots of very big Zoom meetings, I would imagine, across a mining company then. Fantastic. Well, look, thank you so much. I really do appreciate your insights and your recollections and memories, and the great advice as well for other companies now as they handle this current crisis. So I will hand back now to Callum, who's going to close off for us. But thank you very much, Cynthia.
Thank you.
Thank you very much, Cynthia and Andrew, on behalf of Fast Markets, and thank you to everybody for joining in. That was a really insightful interview for all, I'm sure. Just a reminder that this webinar was recorded and will be available for consumption afterwards. If you weren't able to see the beginning or weren't able to stay through the whole thing, and you can obviously share that with your colleagues as well. And also, Tom Albanese's webinar is still available for download for anybody that was missed it. Next week is our final webinar of this series, where Andrew will be interviewing Sven Rikard Brandtzæg, who is the former CEO of Norsk Hydro, and we look forward to welcoming you then. But for now, once again, thanks very much, Cynthia, and hopefully see everyone soon.
Thank you.